Hello, everybody. Welcome to another episode of Viive Values. We've got Kim Milson with us today, and I'm just going to go ahead and add her, and then we will get started. I hope everyone is having a great week. We had some wonderful warm weather there, and now we seem to be back to a little bit colder with some rain, but I'm missing the sunshine. I hope it comes back.
I don't know how to turn my camera
Oh,
around.
God, you need to turn your camera around.
How to go? There we go. Here we go. There we go.
There we go. Hey, hi, Kim. How are you?
Very well, and you?
Good, good. Thank you so much for joining me today.
Thank you so much for asking me. Is it okay?
Yeah,
Okay,
you
good.
look good. You look good.
Oh,
I also like your light fixtures behind you.
uh,
All right, well, let me just tell everyone a little bit about Kim Milson. So she became a licensed mortgage agent after noticing a trend among her small business clients who had issues with personal and business financing. Maybe I need to talk to you about that. So having a mortgage agent license coupled with being a CPA enables Kim to help her clients even further by providing a full spectrum of offerings when preparing their mortgage application. Now, this includes budgeting, tax preparation and filing, and other accounting services. So, real for full service lady here. She's now able to collectively support people to realize the dream of home ownership and their financial goals, which I think is something we all just want, right?
absolutely,
That's
absolutely.
awesome. Well, I really appreciate you being here. And for all those watching, Kim has been one of our trusted partners at Viive for a while. And we actually met in a completely different world and universe and then came together. I knew her as a bookkeeper, didn't even realize that you were a CPA. And then you also became a mortgage agent. And I was like, oh man, I need you to be here with us. So that's awesome.
Thank you.
So today we're going to talk about some things that I know a lot of my clients ask about, and I generally, say you need to go talk to a mortgage broker and get the details about this. But we're going to talk about different loan options, including one that seems to be really common with our aging population, which is reverse mortgages. So let's just start with that. What the heck is a reverse mortgage?
Okay, well, to keep it simple, a reverse mortgage is basically a mortgage that pays you instead of you paying a mortgage. So it's for individuals that are 55 years or older that want to unlock some equity in their home and don't want to have the added burden of mortgage payment. So a reverse mortgage allows you to take out the equity in your home and not have that principal and interest payment every month.
Right. Okay. So that makes sense. So it's like, here, I've got this home. It's worth $1.2 million. I don't have a mortgage on it because I've paid it off because I've been living in it forever. But I want to get some of the equity, meaning like actual cash out of this house.
Yeah,
Right. And so it's a way to do that. Right. So that therefore, in a way, it's like you owe the money one day to the bank, but
right,
you're not actually making
exactly.
payments on it because the equity is in your home.
Absolutely. And there are they don't allow, there are minimum requirements for your age, the value of your home, and then they prorate the LTV, the loan to value, and the maximum usually is only 59% you can pull out or withdraw on a reverse
Got
mortgage. But
it.
that
Got it.
depends,
And are there like terms for repayment, or is the repayment just you sell the house and therefore the money goes back to whoever gave you the reverse mortgage?
with the terms, there's no really terms to repay the mortgage unless certain events happen.
Okay.
So you go into a 5-year term. If you want to renew that term, you can pay it off. But say you've taken out the mortgage, you just need the financing now. I guess this might answer some of your later questions. If somebody passes away, then you would have to pay off the mortgage. If you move out of the home, you would have to pay off the mortgage. But there are certain terms set. Say you go into a 5-year term and that's all you're going to need the funds for, then you can pay it off.
Right. Okay.
It's very similar to a regular mortgage.
Right.
And
And so what are some of the benefits for someone who's, you said 55, right? 55 plus or 50 plus?
they have to be, each one of the persons, the borrowers on the mortgage have to be over the age of
55.
55.
So for people
Yeah.
who are over the age of 55 who want cash, whether that be that they're getting it from somewhere else or from out of their home, what are the benefits of a reverse mortgage compared to just taking out some other type of loan?
So the biggest benefits are you don't have that repayment the monthly repayment. So for instance, if you have a HELOC attached to your home and want to take money out to do payments, you have a minimum interest payment that you have to pay monthly, or you fall into default with it. So the biggest benefit is the fact that you don't have that monthly payment, which means you have a better cash flow.
Right. Nice. That makes sense. And so who, besides being just 55 plus, who might want to consider a reverse mortgage? Like this tool that's been created for people, who is it most helping?
One of the biggest benefits of it is to help people stay in their family home. A lot of people don't want to leave their family home. They love being there. They've raised their kids there, and they really don't want to leave. So if cash flow is an issue, it allows them to tap into that equity and maybe let them stay there. Or if they have, say, alterations they need to do to their home, whether it be put ramps in or proper bathrooms or different things that you might need as you age, it allows them to pull that equity out, make the alterations to their home that they need, and lets them stay there, and plus gives them a little bit of cash flow. Also, with the reverse mortgage, it can help people eliminate debt. So they can pay off their current mortgage, they can pay off their credit cards, which then allows them to free up their cash, their cash flow, so they don't have those monthly debts.
Right.
And it helps them out. It also helps people with fixed income or fixed pensions. So if their fixed pension isn't growing with the cost of living, and they're finding that their cost of living expenses are getting a little bit too high, it allows them to take out a reverse mortgage, get a monthly stream of income, which then helps with their everyday costs. Also, people use investments as a tool for their cash flow. So currently, right now, with the economy the way it is, their investments may be at a loss, so they don't want to draw upon them. So they can use a reverse mortgage to fill that gap in until their investments rebound, which is another option. A lot of homeowners want to help their kids get into homeownership. Yeah. So people will use a reverse mortgage to pull equity out of their home to help with the down payment, and it doesn't add that burden of a mortgage payment onto them. Or they want to give their kids the inheritance and watch them enjoy the money that they've worked so hard to accumulate and give it to the kids without adding an extra debt payment. And another big thing that people could use a reverse mortgage for is unexpected health care. So if an individual finds themselves needing maybe a PSW or a nurse to come in to help them, and they just don't have the cash flow, they can take some equity out of their home and allow them to get that help they need. So yeah, there's a few benefits with it for people that can use it and not increase that extra debt payment that would incur on a regular mortgage.
I think that's really key. I mean, so many people, 88% of Canadians want to age in place. I think the people over the age of 55 were asked that, 88% of them. And although I don't think that all 88% of them are going to get to age in place, I think that understanding how expensive it is to age in place is really key, and then looking at your different financial options, because for the majority of people in the world, our largest asset is our family home. It's real estate of some kind, whether it's a home or a cottage, and you either need to be willing to take out loans against it or do a reverse mortgage situation, or you're going to end up selling it to be able to just afford the costs of how expensive it is to age, whether you're aging in place or aging elsewhere. I think it's something that kind of started, because reverse mortgages aren't that old, right? Like it's a newer thing in the past decade, right? And I think it probably came into place because of this silent generation. So the parents of boomers living much longer than anyone anticipated, and all of a sudden not having money, because people, in their age bracket and the generation before them, they would retire at 65 and die within 10 years. Like, you didn't need an obscene amount of money after you retired, and now you really, really do. So this is such a great tool to have, especially considering, I'm sitting in a house that would probably sell for $1.2-1.3 million right now. I promise you I have a huge mortgage on it. But if I didn't, that would be incredibly helpful, right? To have that additional cash flow. So that's really, really great. Yeah. Now, with any type of mortgage, loan, whatever, there's always risks involved, right? So what are the most common risks that people face with a reverse mortgage?
Well, I think one of the risks is people aren't educated enough on it. So not working with a professional that understands reverse mortgages.
Mm-hmm.
So I think that's very important. If people are considering it, they talk to somebody that knows about it. Another risk that people don't realize that you can default on a reverse mortgage, even though there's no payments. The lenders do require that property taxes and the house be maintained and doesn't fall into disrepair. So if you go into arrears with your property taxes, that can put your reverse mortgage into default.
Okay.
And also if you let the house fall apart, if you're not maintaining the insurance on it, if you're not doing the roof, you're not just keeping it where it should be, that can cause a default on it. And people need to know that. Also, risk of prepayment penalties. So they have terms set for a reason. I mean, obviously, they want to get their interest out of the mortgage that they put in. So there are risks of prepayment penalties. So if you have to break the mortgage early, you have to know what those fees entitle. And that's just working with somebody that will have everything transparent for you, and you know exactly what the cost would be involved. So I think those are the three main risks for people to watch out for.
Mm-hmm. And I think that's really key. I have some clients who've used a reverse mortgage, like you said before, to pull equity out of the house to give to their own children to get into the real estate market. And then their kids start paying them back because they set it up as a loan as opposed to a gift. And their kids start paying them back, and then they start trying to like put the money towards the reverse mortgage and are unable to.
Yeah.
I mean, and there's things you can do. You can just hold on to that money in another account and wait, right? But some people like to see those numbers go down, and then they just can't do that, right? When someone kind of goes into our next question, if somebody dies, the person who has the reverse mortgage, so I understand, right, that the estate pays that back, right? The house gets sold and the reverse mortgage gets paid off, and then you have the remaining from the sale. But I just had a blank brain. What was I going to ask? Oh my gosh.
Well, I'll help you out.
You go.
So when a person does pass away, it's the last person on title.
Yeah.
That when they pass, then the estate has 180 days to settle to pay off the mortgage. So it gives them time to settle the estate, go through probate, whatever it has to be done. They've got a 180-day grace period. But I just also want to touch on reasons why you would have to pay the mortgage back as well. If the home is sold, then that mortgage obviously has to be paid back. Or if the borrowers move into a long-term care facility or a retirement home, they have 100 days grace period to decide if that's somewhere they want to stay. I know a few people have moved into those facilities, don't want to be there, and want to go back to their home. So they have 100 days before they would have to repay that reverse mortgage. So it gives them a little bit of no pressure, a little bit of a grace period to decide if this is the home or facility where they want to stay. So.
And so you wouldn't be able to move out of your home into a retirement home and then rent your home out to make more income. That wouldn't be allowed.
You could.
Oh, you could.
Yeah,
do
you
that.
could.
Okay.
Yeah, you could do that. Yeah. So, and I have a friend of mine. Her father moved into a long-term care facility. He decided he was going to stay there. Unfortunately, she wasn't going to buy the mortgage out. Was able to keep it for a little bit and then have time to get it ready for sale within that time period. So it just gives you, that time also to get rid of the house. But yeah, if they're not planning on going back to the home, it's 1 year after they move out that they have to sell it. So within that year, I guess they could rent it, but if they don't go back to it, it has to be sold.
Has to be sold. Wow. Yeah, I feel like, with a lot of things in life in general, but then also when it comes to anything financial based, we see the one sentence description on the screen when we walk into a bank, right? Get a reverse mortgage because it does X. And then that's all that we fixate on. We're unaware of the fact that it's just as complex in some ways as a typical mortgage that say I got, right? It does other things, it has other benefits, but it's just as complex. There's just as many ways that you could potentially default or have issues, and you need to just be very aware of them. So as you said, working with someone who actually understands, how to explain this to you. Also, I think it's important that when you work with a broker and or mortgage agent and that you explain what it is you want to do with that money, right? I think it's important to know where the money's going as well. Because if you just all of a sudden take $200,000 cash and give it to your kids and they put it in their own house, well, then that money's gone. Like it really is gone, right? There's no getting it back because it's been wrapped up in some other house's equity now, right?
Yeah.
Whereas if you're just pulling it out to travel and you have it sitting in some investment somewhere, well, at least it's accessible to you, right? So it's important to understand, and I think for the representative you're working with to understand how that money's being utilized, so that if, you know, there's a doomsday situation that occurs in your life and something has to be done, you understand where all that money went.
Yep. And I just wanted to mention there is one misconception about reverse mortgages, and that is the bank or the lender owns your home, and they don't. They put themselves on title as with any other mortgage, and it's held like that. So they don't technically own your home and aren't going to take it away. Another thing is a lot of people believe that their reverse mortgage is going to be cost them more than what their house is worth. So there's never a negative equity involved in a reverse mortgage. So at the end of it, say your reverse mortgage is, you know, 200,000. I'm going low, and your house is only worth 150. That 150, the $50,000 difference is a responsibility of the lender. So there's never a negative equity owing back to the lender.
That's good.
Yeah.
That's good to know.
Yeah.
Yeah.
And I think a lot of people worry about that.
I think this is it's an interesting topic, and it's one that I think is going to become just more and more normalized, this concept, right? I mean, as we see the boomer generation get older, as I predict they will resist moving out of their family homes as much as possible. My grandma always used to say she's going out feet first, and I think there's a lot of that generation that feels that way. I think that they're going to need to tap into other financial resources in order to pay for their long lives. And I think that the reverse mortgage is going to be a huge resource to a lot of families to be able to survive really those last 10 years of their parents' lives.
Absolutely. And I think to survive without the worry of money is a nice way to end your life, right? You don't want the pressures of not knowing if you're going to be able to eat or live or stay in your house. So yeah, it does help out and provides a lot of opportunities for people in that sense.
That's awesome. Now, if there's people watching who want to send clients your way or want to talk with you about getting a reverse mortgage, how would they reach out to you, Kim?
Well, they can reach out to me through my Instagram page. They can reach out to me by calling me or by emailing me.
Okay, perfect. Well, if people want to get in touch with her, you can do that through Instagram. You can also message us and we can connect you directly to Kim. We'd be happy to do so because she would do a great job of supporting you and your family through this reverse mortgage journey. Thank you so much, Kim, for joining me today and tackling your Instagram fears and joining us here. You did so great. And I hope you do many more of them because you have such knowledge on a very important topic that I think is going to become more and more prevalent in our society as the boomers age.
Oh, thank you.
Awesome. Thanks so much. Bye, everyone. Check back in 2 weeks for another episode. Bye.
All right. Take care, guys.